Listen carefully, because over the last few days, something has been happening involving World Liberty Financial, WLFI. And whether you're invested or not, this is something every crypto investor needs to understand, because this is not a hack. This is not a rug pull, and no one has been arrested. But somehow around 75 million US dollars have been pulled out of the system using a structure that appears to be completely within the rules. And when you add in the fact that this is a project directly linked to Donald Trump's family, this becomes a story you just can't ignore. So let's get into it.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
Now, I've covered a lot in crypto. We've seen exchange collapses, founders disappearing, and billions wiped out. And usually it's obvious what's happened. Fraud is fraud. A scam is a scam. But this situation with WLFI is very different, because what we're looking at here sits in a legal grey area where rules are unclear, oversight is limited, and systems can be engineered. And when that happens, the people who understand the system best often benefit the most. So first, what actually is World Liberty Financial? Now, WLFI is a crypto project positioned as a bridge between traditional finance and decentralized finance. The idea sounds powerful: being a financial system on chain, create new infrastructure, and open access to future of money. And naturally, that attracts a lot of attention. We're talking major funding rounds, huge retail participation, and a strong narrative around innovation. But like always in crypto, the real story is in the structure, because behind every project is how it's built. And with WLFI, there are two key elements that really matter. The first is revenue flow. Now, a large portion of the protocol's revenue is routed to a central entity. And the second thing is token allocation, because a significant portion of the WLFI tokens is controlled by insiders. Now, let's be clear here. This isn't hidden. This wasn't some big secret. It was written into the documentation. But most retail investors never read that level of detail. Now, this is where WLFI becomes even more interesting, because this isn't just any crypto project. It has direct links to the Trump family. Now, before we go any further, let's keep this grounded. This isn't about politics. This isn't about opinions. This is about structure and incentives. From the project's own documentation, a large portion of the revenue that's generated from this token is routed to an entity called DT Marks DeFi LLC. And according to that same documentation, the entity is owned by Donald Trump and his family. Now, think about what that means, because this is where things start to click. If the platform generates revenue, a significant percentage flows towards that entity. So, as WLFI grows, that entity benefits financially. But it doesn't stop there, because that same entity also holds a large allocation of WLFI tokens. So now you've got two layers of benefit. First is the revenue flow, because money generated by the platform flows towards that entity. And the second is token ownership, because a large portion of the supply is already controlled. Now, again, to be fair, this is documented, this is visible. But the key issue here is most retail investors don't connect the dots. Now, fast forward, because like many altcoins, WLFI started to decline. And at first it was slowly, then more aggressively. And this is where retail feels pressure, because when price drops, confidence drops, emotion kicks in, and people want out. But here's the key difference. Not everybody in the system is playing the same game. Now, this is definitely the part that you need to understand properly, because this is where everything changes, because a wallet associated with WLFI deposited billions of the tokens into a DeFi lending platform. Now, in crypto, this is normal. You deposit assets, you borrow against them. So instead of selling the tokens, you use them as collateral to unlock liquidity. And that's exactly what happened. Those WLFI tokens were used as collateral, and against them, approximately 75 million US dollars in stablecoins was borrowed. Now, let that sink in. No massive sell-off, no obvious crash, just liquidity being extracted. Now, you might be thinking, this is just DeFi, Matt. That is what people do. But here's the difference. WLFI tokens are not freely tradable in the same way most tokens are. They are restricted, they are controlled, and they're not easily transferable for retail. So retail investors don't have that same flexibility, but at the same time, those tokens can still be used as collateral to access real money. So what does that create? It creates an imbalance where one side is restricted and the other side has options. Now let's go one layer deeper, because the lending platform used in this process has connections to the individuals associated with the project. Now again, this is important. I'm not making accusations. I'm explaining the structure of what's happened, because in traditional finance, this would raise serious questions. You'd expect disclosures, independent oversight, and definitely some kind of separation of interest. But in DeFi, those rules don't always exist. So what happened next? Tens of millions were borrowed. Liquidity was pulled from the system. And here's the key part. Pool utilization hit extreme levels. Now, in simple terms, that means the pool was maxed out. And when that happened, other users struggled to withdraw. So now retail investors like me and you are stuck watching funds leave while access has become restricted. So here is the real question. If a system allows a project to use its own token to extract millions in liquidity without selling, who is that system really designed for? Now, let's zoom out a little bit here, because this isn't just about WLFI and Donald Trump. It's about DeFi as a whole. And right now, DeFi does allow tokens to be created, value to be assigned, and liquidity to be extracted without the same rules as traditional finance. And when you combine that with concentrated ownership, revenue control, and connected infrastructure, you get situations exactly like this. So what should you take from this? And what have I taken from this? Because before investing in anything, you should always ask yourself, who controls the supply? Who controls the revenue? And who controls the liquidity? Because if the answer is the same group, you're not on an equal footing. Crypto isn't just about technology, it's about structure. And if the structure is built in a certain way, outcomes become predictable. So whether you look at WLFI and think that's a smart use of DeFi or that shouldn't be allowed, the reality is this: the system allows it. And when you add high profile names like Donald Trump being connected to a project, it brings even more attention to something crypto has struggled with for absolutely years. And that is fairness. Because if a project at that level can operate like this, what's happening to the ones nobody's watching? Now, before I wrap this up, I want to be completely honest with you. I actually hold WLFI myself. I bought in early. In fact, I bought it on a pre-launch. And if I'm being real with you, I didn't do the level of research I should have done at the time. In USD terms, I'm well into 4 figures in this position. The reason this video even exists is because I started digging into what was actually going on after I'd already bought in. And what I found is everything I've just shared with you. Now, in hindsight, I should have done this research first. There's absolutely no question about it. But it is what it is. I'm holding that position for now, and I'm going to see where we are in the next bull run. But the real takeaway here isn't just the Donald Trump WLFI token. It's how we approach investing, because at the end of the day, crypto isn't just about narratives. It's also about structure. So next time you invest, don't just look at the story. Look at how it's built. If you found this breakdown valuable, please hit that like button, hit that subscribe button, and I'm going to keep breaking down what's really happening in crypto so that you don't get caught out on the wrong side of it. Stay sharp, stay safe. I'll see you on the next one. And remember this, the strength of the wolf is in the pack.